The housing market getting a bit of a reprieve thanks to the recent decline in bond yields. Latest report from the Mortgage Bankers Association showing the 30-year fixed falling to 7.61% last week. Joining us now is Mark Fleming, First American Chief Economist. Okay, Mark, so mortgage rates, a bit of a reprieve there. Is it enough, Mark, to give a lift to the housing market?
I don't know if it's enough. I mean, it is a big move from a weekly basis, but 7.6 is still a pretty high mortgage rate compared to what we had just a couple of years ago. I would say I'm happy because it's not 8% anymore. And I'm sure you've been talking about it. Like, the odds are that the Fed stopped cutting rates and some certainty's coming back into the market. And so, maybe we'll get even lower mortgage rates in the next few months. So I'll take any relief in the market right now.
Yeah, that's kind of where we are right now, right? The good news is it's not 8% anymore. And I guess the good news for those who are looking to buy a home is that real estate has sort of been more on the leading edge, right, in terms of where the Fed moves. Ultimately, though, does this come back down to inventory? And because inventory is so low, those prices don't necessarily come down at the levels that most buyers would like them to be.
Yeah, I mean, usually the housing market is first into recession when the Fed raises rates and first out. So, but there is a little bit of this time is different in the sense that because so many people got those so low rates, there's no inventory out there. That's what's really keeping prices up. Even if rates come down a little bit, I don't know that necessarily changes that dynamic of a shortage of supply. 90% of all mortgaged homeowners today have a rate below 6%. And I don't think we're going to see 6 anytime soon for a mortgage rate.
And Mark, where would you need to see the 30-year fixed to come on Yahoo Finance and be more excited and say, this is what could really kickstart the housing market? Would it be 7%? Would it be 6%? What do you think?
I think there's sort of psychological handles around the main numbers. So getting back below 7 would be really good. Getting back below 6, a 5% ranged mortgage rate, I think would really begin to make people sort of say, well, look, I've lived in my house a few years. I know my mortgage rate's maybe a little bit lower, but I still want to move. You can be financially irrational, but more broadly, quite rational in your moving decisions. And that would really begin to unlock the market.
Financially irrational, but quite irrational. That seems like where Josh and I are right now. Let me bring in another voice here, because at yesterday's Yahoo Invest conference, we had former Wall Street analyst Meredith Whitney giving her outlook on when she sees the housing market opening up. Take a listen to what she had to say, Mark, and I'm going to get your reaction on the other end.
Mm-hmm. Deals last year that were done had the highest cash components in over 10 years. Today, if you look at the homeowners, 66% of homeowners, the older cohorts don't have much of a mortgage at all. They're sitting on so much equity. So when they sell a larger house and take out their equity, cash in their equity, they're going to be buying a smaller house, likely for all cash. The risk here is the ability of the buyer, the younger buyer, to buy from the boomer. And that's why I say prices have got to come down to be commensurate with rates. And there's a mismatch here now.
So when do you see this playing out?
I think it starts to happen in 24.
And when do you see the reversal of more supply on the market? Because
I think it's 24 into late 24 into 25.
So, Mark, you heard Meredith Whitney there talking about just where the cycle is right now. You've got sort of the older generation, the movers, who are sitting on, as she describes it, sort of a pile of cash where they, I mean, that ultimately comes down to squeezing out the first-time home buyer even more. When do we break that cycle?
Yeah, I mean, absolutely right. The older generation, the home ownership rate's over 80% for baby boomers, and they do have large amounts of equity. But really, the next step is aging out of home ownership itself. And so it's not about them then buying another home and competing against the first-time home buyer. It's actually about making that home newly available to the first-time home buyer. It's not a 2024 thing. I think we will have short supply throughout 2024. And to your point, the challenge is always for the first-time home buyer getting into the market and getting that first purchase bought. And unfortunately, it's still about as hard as it's been in a generation or two to do that today with these higher mortgage rates and the fact that house prices have continued to increase.
And Mark, we often talk about the housing market like one market, but are there still are there interesting regional differences out there, Mark, that you would call out when you look across the country, east, west, south?
Yeah, obviously the high price markets that we all know about on the coast, particularly the West Coast, they're very expensive still. Prices have actually come down in those markets, but not enough to sort of re-equilibrate reasonable affordability. It's the Midwest, it's the Ohios and the sort of Great Lakes regions are where you find the most affordable housing. And we measure affordability as a function of what is the average house price compared to what people typically earn in those markets for first-time home buyers. And it's places like Pittsburgh, for example, which is a affordable market today. Places like San Francisco, Seattle, LA are not.
Mark, Fleming, you never make me feel better, Mark, as I try to find a home for my family. I always feel just as frustrated, but I love having you on, Mark. Thank you for joining us.